do a sound check here. Yep, we got the recording thing going on. Let's see here. David, Sarah, would any of you mind just unmuting and letting me know you can hear me? Make sure I can hear
Yes, we
you.
hear you. We
Yep.
hear you. Can you
Good,
hear me?
good, good, good. Perfect. All right. All right. There's Misha. That looks like the closest thing to a Chicago Cubs hat he is going to wear. So we shall see.
I
All right,
couldn't find my
guys.
New York hat.
Well, that's okay. I don't. I asked Teresa to take care of him. It sounds like she's done it, so we're good. We
Not
don't
yet.
have to.
Not yet.
All right,
But
welcome
if I do, you
everyone.
look for it.
Oh, that's awesome. Look at everyone here joining us today, Darren. We got a good looking group, and I kind of feel it's a little bit smaller. So we got 19 people on here, and we've got the majority of cameras on here. We just got a few that are not. But it looks to me like either, Darren, that people have come to this before and have learned everything, and so they don't need to learn it anymore, or they're busy selling and just couldn't quite get over here. I'm not exactly sure what it is, but anyone want to share any W's that we've had just the last couple days with advanced markets? I got to hear. I know that there's been a few things going out there, a few things on GroupMe, so I just want to make sure that we are acknowledging and trying to get the momentum going. So who wants to share? Who's got something? Don't make me call on you because Lord knows I will. That good of a week, huh? Okay.
Well,
Who's
actually,
next?
what I'm doing is I'm actually doing it like now. I'm gonna be getting some mortgage protection leads. I already sent the email to Cheryl so I can get them.
Hmm.
And I like the conversion that is being happening with this has been calling, making those calls and making those appointments. So, let's do it. Let's do the
Yeah,
same thing. It is working out, so might as well do it.
absolutely. And Teresa talked to us a little bit yesterday just about some of the things that she's doing with those mortgage protection leads. But folks, mortgage protection leads are not necessarily just for mortgage protection. Especially these lead co-leads, they have a very, very, very strong conversion rate and pivot opportunity to go into something else. And by the way, today, one of the things that we're going to be talking about is how do we find the hidden money? How do we identify the hidden money so that we can now use it to move over into the advanced market space? Very, very important for us. Gail, you were getting ready to say something, and I know you just put something in your mouth too, so I apologize. So hurry up and chew that up and swallow it, get a drink if you will, and then you can go ahead and tell us what you were going to share.
So I called an old lead of mine. I did a mortgage protection on her last year, and so last night I wrote it was very small, but it was a final expense policy. She said she didn't have anything. That's all she wanted. So that's a win.
Beautiful, beautiful. Love to hear it. And it looks like our friend Nicole is writing an application right now. So that is absolutely fantastic. It warms my heart to see agents jump on here with this group and be able to start writing business. It absolutely warms my heart. So that's one of the things, one of the reasons why we have this call, our 1 o'clock Eastern call, Advanced Market Masters, is because we're trying to get agents to be able to understand different aspects of what advanced markets is or are. Advanced markets are. But advanced markets. Oh boy, I don't know if I got the right syntax or the verb tense or whatever else. And Sherry, now since they're recording it, I think everyone's going to realize that I am not a good I should not have even. This is why I'm not an English major. I'll just put it that way. I'm a numbers guy. I'm not an English major, right? So my syntax is probably wrong. But anyway, I digress. Okay, so let's go ahead and get started, shall we? Today, who's ready to learn today? We've got a bunch of cameras that are off. I'm not sure if anyone's ready to learn today. Boy, it just seems like, huh? That's it's a little hurtful, almost. I'm not sure. Like my feelings are hurt. Have you guys ever seen me cry live before on Let me stop sharing this.
Hey, Scott, there you go. I was going to say you're not sharing the screen, so I couldn't see everybody on the thing. So I
Yeah.
see them now.
Now we got it. All
Yep.
right, beautiful. Beautiful. All right. I gotta figure out, Jason, I gotta figure out, buddy, how you have your camera like you have it's almost like Mr. Wilson from Tim the Toolman Taylor, when he's kind of coming, all we see is just the bottom of his. How? Okay, there you go. No,
Oh,
it was
no.
better. It was better the other way, Jason. It was better looking at the back of the.
I knew you were
It's
going to say that.
perfect. Yeah. So anyway, all right. Let's talk about one of the things we want to talk about here is how do we identify advanced market opportunities? What are some of the things we can do? So let's start off with this. How many of us in the last 6 months and the last year have sold an IUL policy or a participating whole life policy? Show of hands. How many have sold? Okay, we've got 1, 2, 3, 4, 5, 6, 7. Okay. Now, let
Using
me
you include that.
Sure, if you want to. Yeah. But I also know you've done other IUL as well, so that still counts. So here's one of the things. Let me ask you guys this question. Why do you not sell more IULs? Why do we not sell more IULs? And this isn't directly at you, but I want us to start thinking a little bit. Why do you not sell more IULs? Go ahead, Gail.
Not great at explaining the illustration part to the client. Then they start asking questions.
Okay. All
I
right.
think, Scott,
So
maybe I probably speak on behalf of most agents. It's not a lead source, right? So they don't. Typically, if you're talking to final expense people, that's not really your IUL clientele. So we're not really reaching the masses because we're not searching for the IUL opportunities. Probably most of them could relate to that.
Okay. Okay. So in other words, Darren, if we don't have a really good aptitude to pivot on something,
Yeah.
it's not, we just don't do IULs because that's not who we're
It's
calling. We're calling
it,
final expense. We're calling
I
mortgage
think
protection.
I think so. I think a lot of times we're dependent on social media for our IULs and big ticket stuff, but we don't market that area as we do final expenses. It's easier to get those cheaper leads, right? But we don't market it. So we rely on warm market. This is across the board, guys, but warm market for your IULs, your social media posts. Somebody say, "Hey, I want to learn more," but we don't go out actively looking for those. And I think that's probably across the board you would see that. And I think most of you would agree with that, I think.
Yeah. So one of the things that I want to do today is I want to kind of put together and walk through a discovery phase, if you will, a bunch of questions. Because what we're going to be doing here is we are going to be trying to find the hidden money, trying to find the hidden money. So the first thing that we want to do is we have to, so there's a couple of, I guess, there's an objection that's out there to anyone, whether or not we know this or whether or not it's in the back of your mind. Here's the objection that you're almost always going to be dealing with. I can't afford another bill. I can't afford another bill. I have too many bills, can't afford one. Have you guys who's gotten that in the last week? Right? I can't afford anymore. Okay. So why is it a killer? Why is that a killer? Why does that disrupt our deal? Anyone? And let's be truthful. We can share. This is a safe space. This is a nest, a trust nest.
Well, with the customer I had, she was quite aggressive in the effect that she could not afford another bill. She wouldn't look at no other options. I can't, why you talking to me? I can't afford it. If I said I can't afford it, she was firm with I can't afford it. It comes at a kind of aggressive, like, no, like you can't afford it.
Yeah. Okay, good. Thanks, Corey. You know, a lot of times, let me ask you guys this. Would you agree that when people say things like, I can't afford it, um, how many times do you think that's really the case? How many times do we really think that I can't afford it is the case? Or could that be an objection or a stonewall?
It's probably just
Yeah?
the objection or the stonewall.
Okay. Now, by the way,
Y-
people are in debt. We know this. People are living paycheck. Over 80% of people in America are living paycheck to paycheck. In fact, we realize credit card bills are slowly going up. Debt balances are slowly going up every month, every year, because there is more month left at the end of the money,
Mhm.
right? So
Right.
some people truly cannot afford it. But let me ask you a question. Let's say, Carrie, you're speaking to someone who is living paycheck to paycheck, they're in credit card debt and all this other stuff, right? They cannot afford it. And maybe they've got 18 bucks in their account until next Friday. Okay? Now let me ask you a question, Carrie. If their refrigerator goes out tonight, what do they do?
Time my phone was, or this was beeping as I was putting it down.
What if their refrigerator were to go out tonight? The person has got 18 bucks in their account. What do they do?
They find the money to go get a new fridge.
Or
Period.
But they can't afford it.
Right.
find a way.
But they're broke, right?
They don't want to be sold.
So herein lies they do not see it necessarily as a need. They see it as a cost. Okay. So because anyone that is looking to pay another monthly something, the first thing in their mind is, can I afford this? Can I not afford this? Gail, what you got?
A lot of times, if they've been called 1,000 times, well, I've already had somebody give me a quote and I just can't afford it right now.
Mm,
They're basing everything off of that one, you know, that one cost.
hmm
So, yep.
Absolutely. So this is what we want to learn today. We want to learn how to be a financial detective. All right. We are going to be working on our sleuthness. Sleuthness? Yeah, I like that. We should call ourselves
Ability.
the Advanced Market Sleuth Squad. I don't know. Anyway, I digress. But there are so to be a financial detective, we want to make sure we understand what questions can we ask to uncover what we call lazy money, hidden money, anything like that. Okay. Who wants to go? We've got primarily 5 or 6 common areas. Go ahead and shout it out if you think you know one of those areas where we can find money that the client probably doesn't even know or doesn't think about. Gail?
They're overpaying on their bills, like credit card bills, mortgage.
Okay. Okay. Good. Good. What else? Carrie, you were going to say something.
I was actually going to say that one.
Oh, I'm
So,
sorry.
But there is another one.
Yeah, go
So
ahead.
they are, say, when you go into their finances, they could be putting additional money in their savings that you could change it around to debt-free life.
Okay. So maybe what we would call cash reserves,
Right.
right? They're putting money somewhere and just setting it aside that to them, I'm going to save 10%, 20%. So this is off limits. That makes sense. Okay. Sherry, what do you have?
Old 401k policies that are hanging out there doing nothing.
Okay. So you say old 401ks. Is there anything else maybe on a 401k in addition to old ones?
Current contributions they're making.
Contributions that they're making now. Now, Teresa, what is it that why would that be hidden money? Like, what in the world? What could they be doing with their 401k that we wouldn't necessarily recommend?
What could they be doing? It's, well, they can, there's different ways to look at it. One is that they can, like, here's an objection, right? They be like, oh, my employer matches whatever I put in. And then you can say, okay, yeah, but you could put in less amount or just put however much they're gonna match into that. And the rest of the money, you can use that into going into your new policy.
Do you guys realize that there are a lot of people out there that overfund their 401k? They overfund their retirement. What does that mean? Well, just like what Teresa said, let's say the company that they're with matches 3%. Okay. 3% of what they put in there, 3% the company will match. Great. But then this person's putting in 6%. So then what does that mean? Well, that means that they're getting a match for the first three, but then the next three, they're overfunding it. They're just putting that as a savings vehicle. That is another place where we can find hidden non-efficient money. What else? No. Yes, Carla. Good to see you, by the way.
Yeah, it's hard for me to make trainings because I work all
No
day
problem at all.
training
Good to see you.
AI. So that is what I do from 6 a.m. to 2 p.m. Arizona time. But yeah, it's good to be here. I don't know if this counts, but it was something I happened to think of. Like when people are paying for subscriptions that they don't realize they're paying for, and that like stacks up to like $100 to $150 a month. It's like, you could go through that with like Rocket Money or something, and that could be what you spend on monthly on your IUL premium. If you
So we would maybe categorize that as just kind of wasted, non-budgeted expenses, right? Like
Yeah.
folks realize they have this Rocket app out there right now because this is such an issue with the millennials and Gen Zs right now. Such an issue. I've got 23 subscriptions where I'm paying $800 a month, and I really didn't know because it was only $8.99. It was only $20 or something, and they don't even realize that it keeps getting pulled out. No big deal. And so, yeah, and I'll tell you this, if someone were to budget, truly budget, you're going to find that it's the same as giving yourself a raise. If you budget every dollar in your account, you're going to find all kinds of hidden money just with stuff that you were letting go out there. And there's one other one that I would probably say, let's look at hidden money. And it's pretty obvious, but we might not be thinking about it. I want to see who wants to guess this one, because if you get it, you are going to get a free trip around the block.
I have another one.
Teresa, you were going to say something?
Yes, I would say certificates of deposits.
Okay. All right. I would lump that into cash reserves. But I like where you're thinking. Tracy, you were going to say something?
I was just laughing at the trip around the block.
Oh, okay. All right.
I had an interview, so I came in late, so I don't even know the question right now.
The question is, how long can we get into this segment before Tracy asks the first question? And I'm clocking 20 minutes. No, so the question is, where do we find hidden money? How can we find hidden money from someone who says I can't afford it? So I'll give it to you because I need a trip around the block because I haven't walked in a couple days. Life insurance. Life insurance. Think about this for a second. If we are doing a debt-free life policy, or if we are doing an increasing IUL policy, do they need to necessarily have another not very well performing final expense or whole life policy or policies that they're currently contributing money to? Right? If we move them from where they are to where we want them, we could potentially recapture that money. Right? If someone's paying $200 a month for life insurance, well, they don't need that now because we're going to put this over in this policy and let their money work better for them. Okay. So those are kind of the areas that we look at and say, all right, how can we find this hidden money? So remember the first one, are they overpaying on their bills? Number two, what was it? You guys may be taking notes. I know you're taking notes. What's number two?
Are
Cash
they
reserve.
over? Yep.
Cash reserves. Cash reserves. We're putting money into a savings account, CD, money market, somewhere, certificates of deposit, whatever it is, we're putting money as cash. What's the third one? That's very common.
Over contributing to their 401k.
Over contribution or contribution.
Subscriptions.
Yep.
The fourth one is budgeting. So what I would say budgeting budgeting leaks or leakage. And so, yeah, subscriptions would absolutely be a part of it. It's just wasted money. Wasted money. Like if you go back and look, in fact, I'm going to recommend you guys do this, by the way, because I guarantee you that you are going to maybe feel a little embarrassed. Okay. Are you ready for this? Here we go. You need to go back and I want you to look at your bank statement over the last 30
Yep.
days. And I want you, before you do that, to say, how much have I spent roughly out of my bank account? And if you use everything on a credit card and pay that off at the end of the month, then you look at your credit card. But whatever it is, I want you to look at that, go back the last 30 days, and I want you to highlight every single thing. And I want you to feel it. Because I can promise you the people you're talking to are no different than you. We know about this stuff. And I guarantee you're going to get a wake up call as soon as you start looking at that and doing it. Wow, I spent that much and that much there. Did I really need that on Amazon there? Where is, oh, I haven't even taken that back. That thing's been sitting on the shelf for 2 months, right? And you're going to go through and you're going to get a wake up call. Trust me when I say that. Do this exercise. All right. So budgeting, the lack of budgeting, there's money going out the door. And what was the final thing?
Life insurance policy.
Life insurance. Yeah. Life insurance. Okay. So then how do we take this and how do we then talk to the client? What are the things we say? So we're, I mean, what do we do? How do we broach them with this? Ooh, tough question. How do we talk to a client? And Sherry, you're exactly right. Less Starbucks, less out to dinner, less cocktails, unless it's cocktails at home. Um, I'll go out and spend, Jana and I will spend $38 on 2 drinks plus tip. And I can get a really nice bottle of bourbon for that. That makes me 4 drinks or more. Depends on how thirsty I am that day.
I think the access to a life insurance policy and having your money just sitting there as opposed to also your 401k, being, taxed to begin with and penalized later when you file taxes, can be a huge burden. And of course, missing out on a ton of money that you put into that type of product.
Yeah. So then what do we do? How do we find this? So we've got these 4 to 5 different areas. What are some questions that we talk to our mortgage protection lead? What do we ask them? Especially when Misha says, "Hey, talk to you about mortgage protection, something that pays up your mortgage. I can't afford another bill, Misha." How do you pivot? Because I get everyone is listening right now to Misha to say, "What do you say?"
So what I say with those clients, I mean, when they tell me, "Oh, I cannot afford it," then I ask them, I said, "Okay, well, let's go through your expenses." I go through the subscriptions, Netflix, and stuff like that. And then I ask them if they have a life insurance policy. And if they do, then I ask them what kind of insurance policy they have. And some people, they have life insurance policies where the monthly contributions are very big. The death benefit is huge. And then I asked them, do you still need that much of a coverage? And so people stop and they say, well, I haven't really thought about it. Okay. And then I add the second question is, in the policy that you have, is it a whole life or is it a term plan? And some people say, well, I don't know. Some people say, well, it's a term plan. Okay, when is it going to expire? Well, I still got 10 years left. Okay, and then this is because I'm trying to switch it from the term to an IUL. Then I asked them, have you noticed that if or when the policy cancels, they're not going to give you any money back and you didn't save any pennies, any money? And then they go like, oh yeah, well, I didn't realize that. And then I said, okay, how about if we do this? And then I go through the needs. Why do you need life insurance? I mean, besides, I mean, who's going to be the beneficiary? And okay, and your kids, are they now dependent? Are they still dependent on you, or are they independent? They can take care of themselves. If they said no, I mean, they're already working and stuff like that. So okay, so if you're gone, they can still survive, right? Because they have jobs. Yes, okay. So how about if we lower the amount of the insurance and put somewhere where you can start saving money for your retirement? How you doing with your retirement, by the way? And then some people said, well, I mean, I'm contributing to the 401k. And then I said, okay, so how much are you contributing? And some people said the max. And when they say the max, I said, okay, so you're understanding that you are saving so much money, so you get a higher tax ramification when you retire. And then they said, what do you mean? I said, well, remember that you're not paying any taxes. When you retire, if you have $100,000, and this is what I said, okay, let's think about it. Let's say you retire and you have $100,000. He goes, right, okay, do you really have $100,000? Because 30,000 out of those 100 are already gone. They're going to be for the IRS. So you have 70 minus fees. Let's say you got 60. How much are your expenses a year? And then people were like, oh shoot, I only have savings for 3 years. Okay, well, let's adjust that and let's put it into an IUL. And that's how I pivot from people that tell me I cannot afford it, or people that tell me I already have insurance, or I do a policy review, and that's how I pivoted into an IUL.
That's good. That's good. I want everyone, is everyone paying attention? Everyone paying attention? I think so.
Yep.
Okay, good. This is what I want us to, I want you guys to write this down, because I think this is really going to help you. When someone says they don't have money, can't afford it, already have enough bills, that kind of thing. Here's the transition. First of all, psychologically, do you think if that was the case, it is hard for that person to admit it? Hard for them to admit they can't afford something because their debt is too high. If it was the case, which of course it is, people are, what is the thing that defines you out with your friends? How much money you have, the car you're driving, did you get the filet mignon or did you get the chopped steak? Like it has something to do with that part of it. And so if someone says, I can't afford it, or I can't afford another bill, or whatever it is, just say, no problem at all. You guys have heard the feel, felt, found transition, right? Misha, I totally understand how you feel. Many of my clients that I'm working with now felt the same way. What they found, feel, felt, found, what they found was that there was actually a lot of money that they had that was not working right for them. And once we identified what that money was and where they had it working, we were able to make adjustments on their money so that it was working way better for them. So, Misha, with your permission, I'd like to ask you a few questions so we can see if you are like a lot of my other clients that have their money in places that maybe not work as effectively as it could. May I ask you a few questions? Do you see that transition there? What I've done is, first of all, I can say anything I want to, but psychologically, no one believes the person talking. They believe the person they're talking about, or they actually will side with and agree with the person you're talking about because they can see that more. So, David, if I say, listen, I've got the best IUL in the world, and this thing, has awesome returns, whatever else. David's like, yeah, of course you're going to say that. You're not going to say it. It sucks. You're not going to say it's whatever. But if I say, David, I've got 4 different people just this week that I was able to help with this, there's a lot more credibility there, right? Because I'm talking about someone else that he can relate to that's not me. So that's the first thing that we need to make sure that we understand that. Also, someone said it earlier, I forget who it was, but people don't want to be sold. They want to buy. Why do people buy? Is buying a logical decision?
No, it's an emotional one.
It is an emotion. So listen, folks, even people say, no, I need to look at the numbers. I need to make sure that, no. All acquisition is emotional, and then they'll use logic to make sense of it. They'll use logic to try to make them feel good about the emotional decision that they made. Okay. So when we say things like, for example, Misha, what a lot of my clients have found when they thought they couldn't afford it is that they have plenty of money. It just wasn't working right for them. With your permission, I'd like to just ask you a few questions and see if we can uncover that money that now they are building wealth because of. Then there's this FOMO. Oh, really? Because I thought I was broke. Yeah, Misha, no harm, no foul, man. If after 10, 15 minutes we can't figure something out, then you're no worse off than you were. At least you know, right? Okay, so there's your pivot. Now, what are the questions that we ask them? Hey, that is also a great question. Number one, and I recommend we do these questions in this order. Okay. Number one, talk to me about your retirement contributions. Talk to me about your retirement contributions. Do you contribute to 401k, 403b, another retirement account? Okay. That is the question. Some sub questions or follow ups would be, all right, how much do you put in each month? Another sub question, what does your employer match? The third sub question, do I need to slow down? How much do you put in each month? Sub question number 2 is your employer matching. Sub question number 3 is why are you contributing to retirement? That answer might shock you guys. A lot of people don't know. Just like when you say, do you know what your retirement gap is? They're going to look at you like you got 3 eyes. Huh? Retirement, what? Okay. So 401k, those 3 sub questions. Does everyone have those, or do we need to go over them again? I'm assuming we all got it. Speak now, forever hold your peace. Okay. All right. So the next thing is number 2. Number 1, do you contribute to a retirement account? 401k, 403b, 457, whatever. Number 2, do you have any existing life insurance policies? Then 2 sub questions. And by the way, you'll find that the sub questions, there's no limit to 2, but the sub questions are really just, you have to ask more questions to fully understand. So, what is the first question? How much do you pay? Tell me about the policy. right? Like, explain what it is. Okay, you'll get the information. And then what would be the second question? And by the way, like I said, you'll see a whole lot of repetition here. What's the next question you want to ask? Why do you have that policy? What was happening in your life at that time where you decided to get that? Why am I doing that?
To see if there's, well, one is to see if the circumstances have changed. Two is to determine, and for them to see like, oh, you don't really need $1 million of coverage right now because you don't have that huge mortgage. You only have this, or the kids are out of the house, or you don't have all those, that debt, whatever it is, to bring them back into what they actually need now, not what they needed 10, 15, 20 years ago.
Yep, absolutely. It could be an option where we see what has changed. But the other thing that it also does is it brings them back to an emotional state of, why did I get this? Well, because I don't want my wife to go without. I don't want my kids to, I don't want, right? And it brings them back into that this is an emotional decision, not a transactional one. Okay. You always ask why. By the way, if you guys are ever on a call with me with a client, I ask why more than anything else. And by the way, I'll tell you this, the first 5 words that should, or the first word that should ever come out of your mouth when you're talking to a prospect or a client needs to be one of these 5 words that started out. How, why, what, where, when. Don't say anything, any other word before one of those 5. Because you're asking the question and you're understanding more. It's one, when you're talking, it's so funny when I'm talking to new agents and, okay, I just talked to a person and this is the information I have. Okay, well, how much are they paying for their policy? Oh, I didn't ask that. Oh, well, what is it that they're trying to do? I'm not sure. Right? We have to ask those questions. We have to. Otherwise, what are we doing? We're trying to sell them something that we don't even understand. That's not even ethical. You know what I'm saying? So we want to make sure that we're looking at that. Okay, we're going to go to number 3. So first one, do you contribute to retirement account? Number 2, talk to me about your existing life insurance policies. Number 3, what kind of debts are you currently paying on? What kind of debts are you currently paying on? Well, why do you want to know my debts? Well, what we're trying to do is uncover the money that's not working well for you and how we can get you to make money on your money. So let's talk mortgage, car, student loans, credit cards. Why do you need to know that? Well, because I think if you're like most of our clients, we've been able to get them out of debt in a third of the time, half of the time, or whatever else. And I would like to at least let you know how your money could or could not work for you. That's why I'm asking these questions. How do I know how much life insurance you might need if I don't know how much debt you have that you're going to pass on to your children, grandchildren, wife, spouse, whatever? Okay. So the third one is we need to find out what debts, mortgage, car payments, credit cards, student loans. And then here's the question, how much extra are you paying on these every month? And someone remind me why I'm asking that question.
To find how
Debt-free
much.
life.
Okay. We're finding the lazy money, right? We're finding the lazy money. If they're paying extra on debts, oh, we know we can actually do something with that now. Debt-free legacy, IUL, whatever the case. Absolutely. Absolutely. Okay. Number 4. So actually, the thing is, what I would do is I would ask them on number 3. Again, I would say, are you paying extra on that? Why? You'd be surprised how much of a
To lower the
relationship.
debt.
Oof. Say that. Well, no. I'm sure they would say that there's going to be a lot of answers, Malin, but we need to ask, why are you doing that? Because it will bring out their reason. Because I was always told that if I would get out of debt faster, okay, right?
Right.
Or whatever the case is. But if you ask them that question, or when do you think you'll be out of debt, or how difficult is it for you to continue to make those payments, or those 5 questions that I said, who, why, what, where, when. If you start it that way, you're going to uncover a lot. Okay, number four. Here we go. Do you have an emergency fund or a savings account? Why do we want to know that right now? Why would we ask that as number 4?
Because that could be some of the hidden money to fund their bank.
Very good. Absolutely. Folks, I'm going to make a statement here and I want you to hear me. Most people will think you're a fool if you make this statement, and so I can back it up if someone wants to ask me why. If you are saving money, you are never going to build wealth. I'm going to say that again. If you are saving money, you will never build wealth. Why do I say that? And then I'll get to Malin in just a second. Why would I make that statement? Who wants to take a guess at that? Sherry, go ahead.
Because you're losing interest.
Ah,
You're
Gail?
paying interest. If you're not making interest, no, you're paying. It's one of the, I get it mixed up.
You're doing one of the two. You're either making interest or paying interest.
Okay.
It's that simple. Okay. Gail, go ahead. Were you going to anything else to add on that, or was that pretty good?
It's pretty the same thing. I mean, it's just sitting in a savings account yielding not much money when
Right.
it could be that same dollar could be doing 2 and 3 other things for you.
That's right. That's right.
So.
The wealthy have their money working better for them. They have their dollar doing 2 and 3 and 4 things for them at a time. The wealthy do not use their money to pay their bills. They do not do that. So when you talk to someone about that question, and you talk to them about, do you have money in savings, an emergency fund, whatever, what does it look like? Now, keep in mind, an emergency fund or a savings account should be viewed as a defensive financial strategy, not an offensive financial strategy. In other words, we're not trying to make money on it. We're trying to protect pulling out money so our compound interest and our money-making activities don't get interrupted. The last thing that David wants to do is he does not want to go to his IUL and take a loan out to buy a refrigerator when it breaks down. He wants to have 3 months minimum of expenses, not going out to eat at Applebee's, but expenses, so that if something happens, David can go out and get the fridge and not worry about what's happening. Okay? But the reality is, a lot of people, I talked to a person here a while ago, they have, are you ready for this? The lady is 62 years old. Nope, take that back. 57 years old. She has only ever worked as an office manager her entire life. Someone take a guess how much she has in her savings account. They're from South Carolina. She's never made more than 40,000.
15,000, about 15,000.
Okay, Corey says 15. Who else wants to take a guess at that?
60,000.
60,000.
I
Anyone
was going to
else?
say 50.
50.
Okay.
75.
Carrie says 10,000, 75. How about $357,000
Ooh, okay.
that she has in her savings account? Now, why do we say you're not going to get wealthy if you put money in your savings account? Because how much does a bank give you with interest. We've already talked about this. A bank will give you, maybe if you have a high yield savings account, they'll give you the first 3 months at 3.5%, 4%, maybe. But I want you to follow me here. Do you guys realize when you save money, what is the average rate of growth that you'll get? What's the average? Let's say 1%. Can we say 1%? Let's say 1%. Okay. So you have $357,000. Let's do 350,000. 1% of that is what? Oh my Lord.
$3,000, something like that.
So we have 350,000, 1%, $3,500. Okay, that they would be making from the bank. And then what do they do with that $3,500? Well, the IRS wants their pound of flesh, so they got to pay their taxes on that because it's income. It's capital gains. How dare you make money? So they're gonna take that. So now that 3,000 is actually what? Let's say it goes down 30%. So now 3,500 is what? 2,500? 2,750? Okay. Now, what is our inflation index right now? Anyone know? Anyone know what CPI is?
2.8% last month, 2.5 the month before, 2.7 the month before that.
Okay. What was it 2 years ago, David? Any idea?
The months last year? No, I don't know the months.
Last year, the year
Month by month.
before, like we came out, especially with COVID, it was double digit inflation CPI, double digit. Now, what is CPI? Anyone for a million cajillion dollars? What does CPI stand for?
Consumer Price Index.
The Consumer Price Index. Basically, that is the measure of inflation and how things grow. So, if the average CPI had been up before COVID around 3.1, 3.2, roughly. Now, with the economic upswing right now, we've got a little bit of a slower one. They're lowering the interest rate, so that there's a lot of things. Let's just say 3%, okay? Just to use round numbers. If inflation is going up 3%, that means $350,000 next year, if it doesn't grow 3%, is losing money. Okay? We all understand that? So you're losing money. Then how much do they tax it? Gains? Well, capital gains, what is it, 25, 27, 30%? If it's not capital gains, it's income, depends on how much it is. Then what else? Is there anything else? So the point is, you've got money that if you're not getting, so what are we talking about? The increase of that is 25%. What's 25% of that actual amount? The whole amount, it's going to weigh that down to 5, 6%, maybe 7%. So CPI is 3, that is 6 or 7. If you don't make 10% on that money every year, you're not even breaking even. You're losing money. That's why I say you can never build wealth if you just save your money. You can't. The economy is going to outgrow it. It's going to be worth less. It's like if someone were to say to you, monopoly money expires the end of 2025, and you're just going to go and you're going to hide it under your bed and think in 10 years, man, I've got all this money. It's going to be worthless. It's worthless. Okay. What is the last? Oh, sorry, Malin. I need to get to your question. Go ahead.
Hi, everyone. Can you hear me well?
Yep.
Okay. Pretty much I agree with Gail. I was about to say pretty much the same when you asked them if they had a saving account. We're using our own money in the bank for the bank to use our money, not for us, and compare with the IUL, right?
I'm not sure I understand
It
the
means
question.
like when you had a saving account at the bank, they use your money, right?
Yes, the
They
bank
move
uses
your
your money,
money.
correct?
right? And you're
Mm-hmm.
not getting any great benefit as a rate as an
Mm-mm.
IUL at
Mm-mm.
all.
Nope.
Yeah.
You're right. Nope.
And with the
Not
debt-free
at all.
legacy, we or I or you are no, we are building saving money on top of that, earning money for us. We can use it whenever we decide, whenever we need it.
Mm-hmm. Yep.
Tax-free
Right.
on top of that, no penalty, and plus the benefit, right?
Yep. Yep. Nope.
But
Absolutely.
isn't
Absolutely.
that with a infinite banking whole life policy, not an
Thank you.
IUL, correct?
With both.
With both. Okay.
Yep. It's with both. So just to make sure we're going through so we can get through this, because Tracy and I have a call in 8 minutes with her debt-free legacy clients. We're going to wish her luck. So we have, do you contribute to a 401k? Do you have any life insurance? What kind of debts are you paying on right now? And do you have savings or an emergency fund? And what is the fifth thing we ask them? Who wants to guess? What is the last question we ask? If anyone can guess this, you are my hero.
We
When are
haven't
you
asked
ready
about
to sign up?
overpaying of
Okay.
debts yet. We haven't
Who
asked
will
about
be your
overpaying of debts.
beneficiary?
Okay, we've got beneficiary. We've got, when are you going to sign up, David? Say what did you say again, buddy?
We haven't asked about overpayment of debts yet.
Well, we did on the debts. We just said, and are you overpaying to any of those? On
Okay,
the
what number was
on the
that? Did
debt.
I
That
miss
was four.
that?
That was four.
Oh, it was number 4. What kind of
Yeah,
debts
that
you're
was
paying?
number 4.
Sorry
What
about
kind of
that.
debts? Yeah, no problem. Okay, number 5. And this is one you probably wouldn't have ever thought to ask, but we're going
Will
to
you
hit
let
him
me
where it
roll up my
hurts.
sleeves?
That is a good one, but that's not the. Here's the question: how much do you pay a year in taxes? Ooh, that stung. They're not mad at you; they're just mad. How much do you pay a year in taxes? You know what they're going to say? Too much, right? Or something to that effect. And then the response or the continued line of questioning is, why do you say too much? Why do you, right? Or how do you feel about that? Or, I was going to ask you, normally I ask people, how do you feel about that? But you've already just said that. Here is the response. Misha, would you like to find a way that we can move your money growth out off of the front page of your 1040? Would you like to pay less in taxes? You ask them those questions, and then, Gail, we say, Misha, will you let me roll my sleeves up for you, my friend, and find you better use for your money so that 30 years from now, you can retire with 7 figures and never have to worry about money again instead of living paycheck to paycheck like you are now. This is the pivot. This is the transition. This is what I wanted to talk about today. Finding where the money is. Where's the hidden money? And if you set it up this way, folks, I'm going to tell you, you guys watch. Misha is going to literally, on his leads that he just got, he's going to use this. This is how good this training is. He's going to use every bit of that. Because this is the best way to transition someone. Guys, there's so much gold out there in these leads. There's so much gold. Now, look, I pay $50 an IUL lead. I get it. This is what I do. But many of us can't right now. You can only do 250 a lead, right? So we're going to do that. We're going to go after those, and we're going to learn how to pivot, because who doesn't want to save money on taxes? Who doesn't want to get out of debt? Now, remember, let's not talk about the drill. We're not talking about any programs. We're just asking questions, right? Why do you need the hole? What kind of hole do you need? What would you do with this hole? You're not going to talk about the drill, how powerful it is, how sharp the bit is, any of that stuff, how quickly you can go through. No, we're not talking about products. That is how we find the hidden money. So I want to stop it there because we have, I mean, this hour went by. Holy crap, it went by fast. Here's what I want to say. Number one, how many people would be able to get at least 2 to 3 people to join an Advanced Market Masters webinar for debt-free legacy next month? If we were to hold a debt-free legacy webinar where we would explain everything about everything, all you guys had to do was just send out the link to get them to sign up. And then if they come to this webinar, it's an AMM deal, which you would get 40% automatically on anything, and SMEs, you would get the full 100%. Show of hands, who would be willing, welcome, and everything to do that? Okay. Fantastic. Fantastic. Beautiful. We're going to come out with that. It's going to be sometime next month. I'm not sure exactly when, but we're going to come out with that. And here's what I want to do, guys. I would love, we have right now 24 participants, including myself and including Darren, including, well, Jason's on twice because he's just special that way, and that's how he needs to roll. And MJ's on here. So we've got about 22 people that can write a policy. Wouldn't it be awesome if next month from this webinar, everyone got to write one policy? Think about that a second. Let's just say we had 22 people at $2,000 a person. Let's go low. At $2,000 commission a person, that's $44,000 off of 1 hour webinar. Now, I can tell you, I did one for another agent this Saturday, and there was about 14 people that showed up to that. We already have 5 appointments of people that, yes, I absolutely, I want to look at this. I want to do this. So this is what we're going to start doing. We're going to start getting on a schedule once a month with webinars, and we're going to do this. And this is an opportunity for you to get active, invite people on social media and all that. So I just wanted to point that out and push that to you guys. More to come on that, but I wanted to let you know. Okay, I've got to open up my Zoom room for Tracy and my other clients. So I'm going to be signing off of this one, folks. Thank you all so much for getting here. And SMEs, I'm going to see you in 2 hours. Please do not be late, and I'll talk to you all soon. Let me know if there's anything I can do to help, okay? Thanks, everyone, for your time.